So today we're going to have a slightly different kind of conversation. We usually talk about, optimization, high-level strategy, tech trends.
hmm
But today we are tackling the single biggest excuse in the book. And I call it an excuse, but for millions of people, it feels like a 10-foot concrete
I
wall.
don't have the money.
Exactly. I don't have the capital. I'm broke. I can't start a business because I'm living paycheck to paycheck. We've all heard it. Maybe we've said it.
Sure.
But we have a stack of sources today, from World Bank studies in Uganda to frugal innovation frameworks,
Yeah.
that suggest this barrier might actually be, well, an illusion.
It's a provocative stance for sure. The research we're digging into argues that money isn't just unnecessary to start. Focusing on it might actually be the wrong move entirely.
Okay, that sounds great on, a bumper sticker, but let's be real for a second. If I want to open a coffee shop, I need espresso machines. If I want to build an app, I need servers. How can we honestly sit here and tell people that money doesn't matter?
Because we're not talking about opening a Starbucks franchise or building the next Facebook right out of the gate. We are looking at a fundamental shift in how we define assets.
Okay.
If you look at the source material, they present a kind of formula. They list 4 specific assets: skills, knowledge, time, and energy.
And cash isn't on that list.
Cash is a tool, not a foundational asset in this model. The whole argument is that if your cash variable is 0, you just have to compensate by heavily investing the other 4.
So this deep dive is really a toolkit. It's for that person who wants to go from employee to entrepreneur, but has no safety net.
Exactly. We're talking about bootstrapping in its most extreme form.
The $0 startup.
That's the one.
I want to get into the mechanics of how that works, but first I want to look at a specific case study. I think it grounds this whole idea. The Visme source mentioned a guy named Michael Hanna. Did you see that story?
I did. It is the perfect example of necessity entrepreneurship. This isn't a guy who dreamed of being a CEO. He was working an office job for 25 years. Then, boom, it's gone.
Which is just a terrifying position to be in. Mid-career, suddenly zero income.
Exactly. So he's frantic. He needs to pay bills. He doesn't have savings to lease a storefront or buy a bunch of inventory. A friend suggests he sell mattresses.
Right. And most people would say, I can't do that. I don't have a truck. I don't have a warehouse. I mean, mattresses are huge.
They're huge. You can't exactly put them in your pocket. But Hanna didn't let the lack of capital stop the execution. He started delivering them on a bicycle.
But a bicycle.
A bicycle, literally strapped to his back or somehow balanced on the frame. He just eliminated the overhead. No truck, no gas, no insurance, no warehouse. He substituted capital with energy and time. And he built it.
Wow.
He built it into a sustainable micro-business.
That is incredible, but I can hear the listener right now saying, okay, that's inspiring, but I'm not going to strap a mattress to my back. It is a bit extreme.
It is.
So let's look at the more accessible models. The sources from Forbes and Jamith Had talk a lot about service-based businesses.
This is the most logical entry point for the $0 founder. If you have a skill writing, cleaning, consulting, bookkeeping, the cost to start selling that skill is $0. You're just trading your expertise for cash.
But isn't there a hidden cost? Like marketing, how do you get clients? I think the Lossico source mentioned a consultant who started with a zero sign made with his hand.
Yeah, and that anecdote is key. That consultant didn't go build a website first. He didn't print business cards. He went out and used his relationships, his social capital, to get the first client.
And the check from that first client.
Paid for the website. The point is, you don't spend money until you make money.
Okay, so that covers services, but what if you want to sell a product? I feel like everywhere I look online, someone is screaming about drop shipping. Is that actually a legitimate model for someone with no money?
It's a legitimate logistics model, but it's often marketed as this sort of get-rich-quick scheme, which it absolutely is not. The sources explain it pretty clearly. Dropshipping just removes the inventory cost. In a traditional retail model, you buy 1,000 widgets, you store them, and you pray they sell. If they don't, you're out of pocket.
You're holding the bag.
Exactly. In dropshipping, the supplier holds all the stock. You list the product online. When and only when the customer pays you, then you pay the supplier to ship it. You never touch it.
So you're not really a retailer. You're kind of a freelance marketer for the manufacturer.
Precisely. Your capital investment is the energy you put into finding customers, not the money you put into warehousing boxes.
And then there's selling information. The Alex source highlights this as a really high margin play.
Oh, this is huge because of the write oneself forever dynamic. If you have knowledge, I mean, say you're great at fixing bikes like Michael Hanna, or how to navigate complex tax forms, packaging that into an ebook or a course costs nothing but your time.
And unlike a mattress, you don't have to deliver it on a bike. You just email it.
Zero shipping costs, zero inventory costs. It's almost pure margin.
Now, I need to pause here because there is a very strong warning in the SoFi and Lasico texts. We're painting this picture of great business models, and the temptation is to say, great, I'll quit my job tomorrow and start dropshipping.
And the sources are basically screaming, do not do that.
Why? If the model is so good, why not go all in?
Because desperation is a terrible business partner. If you quit your job without a safety net, you need to make a sale to pay rent next week. That kind of pressure, it forces you to make bad long-term decisions.
You'll underprice your services just to get cash.
Yes, or you'll take on those nightmare clients.
So they recommend the 5 to 9 strategy.
The side hustle. You keep your 9 to 5 to keep the lights on. Your day job is your angel investor. Then you use your 5 to 9, your evenings and weekends, to build the business.
There was a specific tactical piece of advice from SoFi here about finances that I thought was really interesting. They said to separate your finances immediately, even if you're making peanuts.
This seems so minor, but it's psychologically massive. Even if you only have $5 of revenue, put it in a separate bank account.
Why does that matter if it's $5?
Because it shifts your identity.
Yeah.
It stops being a hobby where you just spend money, and it becomes a business that has its own ledger. Plus, if you mix your personal grocery money with your business money, tax time becomes a complete nightmare. You have to treat it like a Fortune 500 company from day one, even if the balance is zero.
Let's shift gears a bit to the product itself. Usually when we talk about innovation, we think of, high-tech labs, millions in R&D. But the CME Live Source talks about frugal innovation.
This is one of my favorite concepts.
Yeah.
In India, they call it Jugaad. It's about innovation born of necessity. Western innovation is so often about adding more features, more power, more cost.
Right.
Frugal innovation is about deconstructing a product to its absolute bare essentials to make it accessible to everyone.
The example that really stood out to me was the MIDI Cool,
The clay refrigerator.
which sounds like a total oxymoron.
It does, but it's brilliant engineering. It uses evaporative cooling, just physics, to keep vegetables fresh without any electricity. The inventor saw a problem. Villagers couldn't afford standard fridges and didn't have reliable power.
So he didn't try to make a cheaper electric fridge?
No, he rethought the entire concept of cooling based on the materials he had available, which was clay.
So the sociological insight here is that resource constraints are a disadvantage. They're a design parameter.
Exactly. Constraints force creativity. If you have $1 million, you solve problems by spending money. If you have $0, you have to solve problems by thinking differently.
But let's play devil's advocate again. Not everyone is an inventor. I mean, I can't build a clay fridge. What if I just want a business that works? The Wikipedia source brought up micro-franchising.
Yeah, think of this as a business in a box for the bottom of the pyramid. We know franchising McDonald's, Subway, but those cost hundreds of thousands of dollars.
Sure.
Micro-franchising applies that same system, a proven business model, branding, training, to tiny, low-cost businesses.
So instead of a Subway, it's maybe a branded push cart.
Exactly. Or a kit to become a vision care provider in a rural village. It solves the idea problem. If you are a necessity entrepreneur, meaning you need to eat now, you don't have time to research and develop a new product. You need a model that you know works today.
This connects directly to something I found really heavy in the Babson College source. They talk about the lean startup method. Now, in the tech world, lean startup is the Bible. Fail fast, fail often.
And this is where we have to be so careful applying Silicon Valley logic to poverty.
Yeah.
In Silicon Valley, if you fail fast, you learn a lesson, you write a blog post about it, and you go raise a new round of venture capital.
Right.
At the bottom of the pyramid, if you fail fast, your kids might get pulled out of school. You might not eat.
That puts a really stark reality on it. So how does the lean startup change when the stakes are survival?
The Babson research suggests a major shift from innovation to imitation.
Imitation. That sounds uninspiring.
It's risk management. Instead of trying to disrupt the market with a risky new idea that might fail, you look for what is already working and you copy it. You rely on imitative business models.
So if you see someone successfully washing cars, you start washing cars.
Yes. You innovate on the service or the reliability, not the core model. And the MVP, the minimum viable product, it isn't just a test run.
It's the only alternative.
It is the only alternative. You build the smallest possible version of your business because you physically cannot afford to build the second version if the first one flops.
There was a Japanese phrase in one of the sources, genchi genbutsu.
Go and see for yourself.
How does that apply here?
It completely replaces expensive market research. If you can't afford a $10,000 focus group, you go to the street corner and you watch. You talk to people. You get a deep first-hand understanding of the customer.
Which costs $0.
$0, but it yields better data than a corporate report because it's unfiltered.
And speaking of testing without money, HubSpot mentioned the fake door technique. I love this idea.
It's a classic validation tool.
So explain how that works for someone with no budget.
Okay, let's say you want to start a dog walking service, but you don't know if your neighbors will pay for it. Instead of buying insurance and leashes and printing shirts, you just put up a flyer or a really simple landing page. Dog walking service. Sign up here.
And if no one signs up?
You take the flyer down.
Yeah.
You'll lost nothing but a piece of paper and a little bit of time.
Yeah.
But if 10 people call you, now you have a business. You've validated the demand before spending a single dollar.
Okay, so we have the models, we have the validation strategy, but what about the person running it? The World Bank source on that seed study in Uganda was fascinating. They compared teaching hard skills versus soft skills.
This is such a crucial piece of the puzzle. We often tell people, go learn accounting, learn finance, learn coding. Those are the hard skills, and the study showed those are good. They increase profits.
Right.
But the group that was taught soft skills, negotiation, persuasion, personal initiative, they were the outliers.
The stats were impressive. Both groups increased profits by, around 27 to 35%? But the soft skills group showed transformational entrepreneurship. Why? Why does being persuasive matter more than knowing how to balance a ledger?
It comes down to what they call self-efficacy, the belief that you can actually change your outcome. When you have limited resources, you can't buy your way out of a problem.
You have to negotiate your way out.
You have to negotiate your way out. You have to persuade a supplier to give you inventory on credit. You have to convince a landlord to give you a break.
So effectively, your personality and your ability to handle rejection, those become your financial assets.
Exactly. They refer to this as the entrepreneurial mindset. It involves self-leadership. Can you pivot when things go wrong? Because in poverty, things will go wrong. The seed study suggests that while hard skills keep the books balanced, soft skills are what keep the business alive during a crisis.
So, let's say we've done all this. We've bootstrapped, we've used our soft skills, we've validated with a fake door, but eventually you hit a wall where you actually need some cash to grow. Where do we get it if banks won't talk to us?
Well, first there's the reality check. One source says 77% of small businesses rely on personal savings.
And for many people, that's under $5,000.
Often much, much less.
Yeah.
But let's look at the alternatives. Microfinance is the big systemic answer. The Semantic Scholar source analyzed this really deeply.
And it showed a 28% increase in household income for the beneficiaries.
That's significant. And a 15% increase in entrepreneurship rates. But it's not just about business. You see these ripple effects improvements in health and education. When you fund a woman's microbusiness, she doesn't just buy inventory. She pays school fees.
But microfinance is still debt. You have to pay it back. What about grants? The Keogh source from the U.S. Chamber mentioned them.
Grants are free money. I mean, they're competitive, but they exist, especially for specific demographics, women, veterans, minorities. It is worth the energy asset we talked about earlier to hunt these down because it's non-dilutive capital.
You don't give up equity and you don't pay interest.
Right. And then there's crowdfunding. The sources call it democratic finance. This works best when you're really rooted in a community. If you are solving a local problem, your neighbors can become your investors. If you can get 100 people to give you $10, you have your seed capital. And maybe more importantly, you have 100 people who are now emotionally invested in your success.
Okay, we're coming down to the wire here. We need to talk execution. You have the idea, the mindset, maybe a little funding. What are the nuts and bolts to make sure you don't get shut down?
Right. The boring stuff is the most important stuff. There's a basic checklist. First, refine the idea. Does it really solve a problem? Second, legal structure.
And most people just start working, right?
Yeah.
Which is a sole proprietorship.
A sole proprietorship is the default. It's the easiest to start. But the sources recommend looking at an LLC, a limited liability company.
Why? Is it just for the fancy title?
No, it's for protection. It creates a wall between your business assets and your personal assets. If your business gets sued or goes bankrupt, they can't take your personal car or your house. For a vulnerable entrepreneur, that shield is vital.
And getting an EIN.
Employer identification number. It's a tax ID. It's free from the IRS here in the U.S. It lets you open that separate bank account we talked about. It makes you legit.
One of the sources emphasized writing a business plan, but not some 50-page document for a bank.
No, please do not write a corporate thesis. Write a plan for you.
Okay.
Focus on one thing, profitability. When you're bootstrapping, you don't have the luxury of burning cash for growth like a tech startup. You have to be profitable on unit one.
If it costs $5 to make, sell it for 10. Day one.
Day one.
So zooming out, what does this all mean? We've covered a lot of ground.
Well, if we look back at the World Bank source, this goes way beyond just making money. Entrepreneurship in this context is about social leverage. It's about breaking intergenerational cycles of poverty. It transforms subsistence, getting by into transformational growth.
It's empowerment. It's taking control of your economic destiny using the assets you already have.
Precisely.
I want to leave our listeners with one final thought that came up in the materials, the concept of the entrepreneur. Because maybe you're listening to this and you're thinking, I just can't quit. I can't even do the side hustle right now. I'm too tired.
And that is a completely valid feeling. But the concept of the entrepreneur says you can apply these entrepreneurial skills within your current job.
So even if you're working a low-wage job, you can practice.
Absolutely. Can you find a way to save the company money? Can you invent a new process? Can you negotiate a better deal with a vendor? You're using the company's resources to train yourself.
So you're building your skills and knowledge assets on their dime.
Yes. You increase your value, potentially you increase your income, and you learn the ropes of business without the financial risk. The line between employee and entrepreneur is much, much blurrier than we think.
That's a great perspective. You can start practicing today right where you are.
You can.
So here's your call to action. Before you worry about a bank loan, take out a piece of paper. Write down your assets, your skills, your knowledge, your time, and your energy. That is your bank account. Go make something with it. Thanks for listening to The Deep Dive.
See you next time.